Hey, Ivan from the EV Stock Channel here, and in today's episode we've got Rodney Hooper from RK Equity to give us a 6-monthly update on what's been happening in the world of the battery raw materials. And as always, thank you to all the Patreons that make these episodes possible, and of course, none of this content is financial advice, so let's get into it. Rodney, welcome back. Can't believe it's been almost 6 months since we last spoke.
I know, Ivan, good to see you. I can't believe it either. Has it been that long?
Yep, I just checked and yeah, time is absolutely flying. So one thing that I noticed just scrolling through Twitter, you had a $20,000 price target for lithium. But before we get into the details of that, I was just wondering if you could briefly describe how lithium pricing works. Like when you're talking about $20,000 a ton, are you talking about lithium as a commodity? Are you talking about lithium hydroxide, lithium carbonate, and maybe what the differences are between hydroxide and carbonate? I was just wondering if you could just start off by giving us some basics.
Sure. So just on the 20,000, all I've stated is that it's possible, and we'll get into the reasoning as to why. So the way that the lithium market has worked in the past, and it's trying to pivot slightly now, is a lot of the pricing that gets executed between the incumbent producers and the downstream customers is done on long-term contracts from the big players. Some of the other incumbents like SQM have tended towards the shorter dated contracts, but by and large, the important point being it's done contractually between the parties. The quality, the penalties, the pricing is all hidden. They don't disclose those. We have a sense of where they are because trade data tells you, but there's also some complexities there. The balance of lithium trades in the spot market, the China carbonate market is probably more liquid because a number of the operators and downstream customers prefer to take their chances on near-term pricing. Hydroxide, less liquid, but again, I'll get into that discussion on pricing, but and why I think things are changing. But cathode production, high nickel cathode production in China is rising very rapidly, and so there is a bit more hydroxide trading in the spot market there. My price target, well, it isn't a target, I just said it's possible, was on hydroxide. That is the material. Anything above 65% nickel in the battery needs hydroxide. It's to do with the sintering process when you do the cathode. So you need hydroxide given a temperature, essentially in terms of sintering the materials together, it needs hydroxide. So below that, you can use either carbonate hydroxide, but often it's based on cost, sometimes on usage. So carbonate often wins the day in lower nickel applications and in LFP, which, as you know, has been really popular for the Tesla short-range Model 3 in China. So when I talk about pricing, what I was mentioning in terms of what is potentially possible coming up in the second half of the year is that lithium hydroxide, which is used in the Model Y, it'll be used in the Semi, the Cyber. The 4680 cell going to roll out in Germany and in Austin and Shanghai. That is likely to be a high nickel hydroxide based material. All of the new sort of SUV and pickups and so on in the US are with South Korean battery suppliers, and they also use high nickel hydroxide based cathodes. So I'm saying, if you look at the number of suppliers that are out there, there are not a lot of qualified suppliers for hydroxide. But in fairness, it's also, the market has caught everyone by surprise in terms of EV sales growth, and the same for carbonate. But we feel, given the limited number of suppliers and given the rate at which high nickel cathode production is rising inside of China, and it will soon be applied into all the US and some of the European models. I think it's going to be really tight before year-end. Carbonate won't be far behind. It just has slightly different dynamics. But what we're thinking about is sort of, I guess, just letting the Tesla followers know that, the key material going to go into the 4680 high nickel cells is on the rise.
Okay. And maybe just to give some perspective, are you able to just briefly give us a history of the few booms and busts we've had in lithium pricing over the last 10 years? Like, what's caused those spikes and retracements?
So, the first boom we had, I guess, was when EVs took off in China. More recently, so I think 2016 was started at the end of 2015, 2016, 17. That was carbonate driven at the time. There was some subsidy issues. China had a certain criteria in which to qualify for subsidies. They started to introduce range and all sorts of things, and basically energy density qualifications. Simply put, we had a boom, there was a shortage, there weren't a lot of suppliers. Battery specification for a lithium battery specification kind of came out of the blue. Before then, lithium was used for grease, ceramics, pharmaceuticals, etc. Suddenly you had battery supply, and the criteria and the quality shifted a little. What caused an unraveling of it in 2018, 2019 simply was, in our minds, it was under demand. China cut back on subsidies, and suddenly 2019 was meant to be a good year, and it ended up being, if you remember, I think we went from 2.1 to 2.2 million EVs, and the market was preparing for 2.7, 2.8. And in a very small market it was at the time, sort of 15, 20,000 tons of oversupply caused quite a lot of grief, especially in the China market, where operators didn't have very flexible balance sheets. Essentially, if they produced it, they need to sell it. And it became kind of a downward spiral because in order to stay alive, they needed to keep producing, but the prices keep dropping. So no one wanted to hold inventory. They were just selling, and it was very, very brutal. Even into last year, I think we were touching as low as $5,000-$6,000 a ton, which almost nobody can survive. So a lot of guys were raising money, and it was also at the time, in the build-up to that, a whole lot of spodumene producers came online and started supplying again into a market that was supposed to be there, and it wasn't. Then late last year, after we'd seen the EV story turn, if you remember, everyone was expecting, Wood Mackenzie had 1.4 million as their sales projection. I was on the upper end at 2.2, and even then, it was looking slightly down to flat, and even that seemed bullish. And of course, we ended on 3.2 million last year, so a massive pickup above most of the consensus. Suddenly, I think what became very apparent was, in terms of inventory and the material available, the quality of it, there wasn't a lot of as much high quality material as people thought. There were also inventory builds, to going into this year with improved sales. And yeah, we found ourselves, despite all the talk of 800,000, 1 million tons of spodumene concentrate sitting as inventory in China and lots of chemical inventory, we seem to have wiped that out in very short order. Inventories are right down now. A lot of the guys are sold out, the incumbents, and now we're running, month to month. Now the question is, previously, I mentioned that it was the European OEMs, because of CO2 penalties, that they have to produce EVs, otherwise the penalties are huge. You can have a penalty almost as much as 9,000 euro a car. So what price you pay for lithium, cobalt, nickel, LFP, it doesn't really matter. You need to sell the car because the penalty is enormous. You want to avoid that, as long as you have the production capacity. But now what we've seen, and also Tesla's very high valuation meant they needed to show very high compound growth, so they need to sell EVs. But now we've seen Ford, GM, BMW, Rivian. We've seen a whole lot. I mean, Rivian suppose you're going to get a $70 billion valuation. It's not optional for OEMs now or EV manufacturers to not sell EVs. Otherwise, their valuation isn't justified. And you can throw NIO and Xpeng and that. You know, these things have got eye-watering valuations now. So the question now is, as we get into a tight market, who's got supply contracts, who doesn't? Northvolt keeps signing deals constantly. Now they've got a Volvo deal. So the question is, can you afford not to produce the EVs that you've promised, given your share valuation?
With that, I was just wondering if you could maybe just give us an update, because the last time we spoke, you know, going back 6 months, Elon Musk was talking about potentially not being able to make a Tesla van, where you're saying, you know, there's no point adding complexity if they don't have enough battery cells. And the question I posed to you back then was, why is there a shortage of cells? Is it because there was a shortage of battery cell manufacturers, or was there a shortage of raw battery materials? And from what I remember, you mentioned that currently there was a shortage of manufacturers, but long term it will be a shortage of raw materials. So I was wondering if you could
we
maybe...
literally pivoted as we had that last discussion to materials. You know, hydroxide was slightly a little behind. So I'll be honest, I mean, I think that given the profitability relative to the size of the battery pack, I think the Tesla Semi is unlikely to be launched in the near future. I think he might put a few, you know, examples out there. You know, Elon Musk now said 12 to 18 months before they're ready to ramp commercial production of the 4680. And that was, I think, back in March, was it? Or I think around that time. Our pal Jordan Gieseke did a very good video on it. People, I'd recommend them to go watch about how they maneuvering around and playing Tetris, as he calls it, with the cells available. But if a Tesla Semi's got, you know, 600 kilowatt hours or 700 kilowatt hours or 800 kilowatt hours as a battery pack, and you can only sell it for $250,000, you know, dollars, it doesn't make sense to use up that much battery cell capacity on that vehicle. Right now, I'm surprised if I said cells, because there is enough capacity out there, although tier one. But right now, in my opinion, we are already in crunch time in terms of battery materials. So it depends now. You need to know which emperor has no clothes, who has got the contracts and who doesn't, because availability now is going to be extremely tight.
Is there much supply coming online soon or in the pipeline? So
what you've got, you know, SQM on the carbonate side, you've got SQM ramping aggressively. They're trying to get to 180,000 tons of capacity by the end of next year instead of the year after. So that's a jump of 60,000. I don't know what they'll produce. There's a couple of other Caucharí Olaroz is supposed to come online middle of next year. And then you've got La Negra 3 and 4 from Albemarle that is supposedly finishing now and in middle of the year, and then commissioning in the next 6 months. So that I have some reservations about them getting anywhere near the capacity of those two additions because of their pumping limitations in the Atacama, and you know how much you can improve your yield in recovery. So there is some carbonate coming online, but you know, LFP and what have you is doing really well, but there is some coming online. In terms of hydroxide, Kemerton is supposed to be finished by the end of the year, and then that'll ramp going into 22. Again, I would be cautious to be very aggressive on what I expect the ramp up to be, even though it's using Greenbushes material. And then the other one is Kwinana, which is Tangshan and IGO that have now partnered on the Kwinana plant. They're looking to start working on that. I do think that there is some teething that has to happen on that, but there's opportunity. And then Livent, a way to go before there's much ramp. I've mentioned Albemarle, and then of course Ganfeng, the other major player. They will continue to ramp on their existing capacity that they put into production in Q4 of last year. So I expect them to bring more on stream, but it's going to be a real challenge on the hydroxide side, in my opinion. Yawa is up and running. They did a deal with Tesla. They signed an offtake, but as far as I understand, they have yet to deliver and qualify into that chain. So yes, there's some supply coming online, but I think given where inventories are and the rate at which EVs are going to grow, certainly this year, there seems to be no slowdown. Next year, as you know, the CO2 penalty in Europe sort of flattened. So if they kind of get to the level now, there's only a 1 or 2% increase in EV penetration to keep meeting that CO2 emission target, given the last of the super credits that unravel off the books. So Ivan, you tell me, if we see another 30% EV growth next year, it's going to be very tight times for everyone.
What about on the battery cell side? Is there much supply going to be coming online?
The battery cell side, there's always new production capacity coming on. Obviously, one of the key things, and it's a huge swing factor in what's going to happen in the demand for hydroxide, is Tesla going to bring Austin and Germany and later Shanghai, but more next year. They again, Jordan covered this. Elon Musk had a target of 100 gigawatt hours of capacity in 2022. So that alone is an enormous swing factor in the market if he hits his straps or if they don't. You've got Northvolt coming online and others. So cells are coming online again. I think you've covered this before in a couple of your shows with some other guys in terms of production scrappage and what happens when you start up. I think the 4680 is also firing out a few duds still. They're still trying to work that out. That could be going to the recycling plant and circling back. But again, when a guy is as smart as Elon Musk says, it's hard to produce cells, I think you could take his word for it.
And is that like one of the reasons you think you're getting like a lot of SPACs coming online, with battery companies trying to take advantage of this hype with EVs and a potential shortage? I know like QuantumScape is the one that everyone's talking about. That
does come up like a bad penny, and a lot of people have raised. I think, again, we've had this discussion. If you think about how much time and how much energy and manpower, Tesla's throwing at the 4680, just trying to get that right. And I'm sure they'll get there, but, there's few people that have the resources and the dedication and the sort of level of staff that they no doubt have on this. And even that is really a tweak here and there on the cathode and on the doping, I guess, of the silicon in the anode. So, but that said, Ivan, make no mistake, and I've said this before, if you can get your battery pack cost down to $60 to $75 per kilowatt hour, you can electrify everything. And if you look at Benchmark Mineral Intelligence's Gigafactory tracker, that is already up to now, I don't know, 3.8 or 3,900 gigawatt hours by 2030. But that was 1,800 2 years ago. So my point to you is, at the rate of change that we're going, we could see that, if you extrapolate it out, that gets to sort of 8.5 to 10 terawatt hours by 2030. So, there can be endless demand for it. The question is what it is that you're going to produce or not produce. So you've got Northvolt growing very quickly, and now you have, VW looking to do its thing in Europe, in addition to Northvolt, looking to put 6 of its own plants in place. And there's been a lot of chatter that something may happen with VW, Skoda, and Ches in the Czech Republic. There's been a lot of and it makes quite a lot of sense in terms of location near the plant. You've got European Metal Holdings, as you know, a client of ours, massive resource that Ches is the 51% holder of. And you've got Euro Manganese also located in the Czech Republic. So you would have lithium and manganese located near site as well, depending on where your cathode is, of course. The next trick is, if the demand is going to be that big, but resources are scarce, the key thing now is to make sure that you've bedded down your contracts. And it is still a mystery to us as to where Northvolt's going to get its lithium from. We're still waiting to hear. Nothing's been disclosed. Now, they may have done something, but the two companies that they signed offtakes with, which was Namaska and Kwinana, are both still on bricks. So I still need to know how they're going to initiate some of their contracts. If it's BMW, etc., BMW has some material come from Ganfeng, so they might obviously on-deliver onto Northvolt, and that covers that piece. But their ambitions of how much they're going to grow seem to be, going up every month. So where are they going to get it from? Now, we like the concept of low carbon, cheap electricity backing these plants. Makes sense. They want to be carbon neutral. The other, again, we do advisory to is Freya, which is looking to go into Norway, which has got a lot of cheap, clean energy. But again, why we like it is 2 things. The one thing is that Freya wants to put in pilot plant, and it wants to sort of do baby steps, crawl and then walk and then fly in terms of what they're looking at. So pilot plant and then energy storage, which is a lot easier a hurdle to achieve first to produce than it is to produce a high-end battery with that. And again, high-end batteries are hard to produce. So I think it's important to flow through. Freya has 24M as their partner, as ex-MRT. They've got 10 years of experience. But the other thing we think is important.
I was just going to ask you, what type of batteries will they be making? Will they be making solid state or conventional?
Who?
Freya.
So Freya will start with a pilot, and then they will do an energy storage. So a low risk sort of high cycle energy storage battery before they move to the EV higher spec. So, and there's already, I think Kyocera and some others that are piloting already 24M's tech, and there's a sharing of that technology and advancements, that's shared between the guys who have the license.
And who is 24M? It's not a company I'm
That's an
very familiar with.
ex-MRT. It comes out of the US. It's an ex-MRT founders that have been going at this for 10 years. You can look up what they have in terms of patents, but again, they are working or have ironed out in terms of going to the EV, but that's, Freya's going through in stages. And energy storage and things like ferries and all of that type of thing, there's a lot of demand for that in their neck of the woods. But I think, the key for me is, yes, the technology is one piece that's important. The second thing to my mind is the raw materials bedding down, and they have Glencore and Coke as pipe investors into their company. They've signed an MOU with Freya, and then Tolga signed on the graphite side. They're also zero carbon, I think. And Glencore could also be instrumental on the nickel side. So, and Glencore has, through their XPS subsidiary, they have XPS is working with Frontier to produce lithium hydroxide. But I guess the point being, with those kind of pipe investors, and they're sort of taking more seriously how they're going to build the platform on the raw material side. And I just I see, battery plants getting, announced week by week in Europe. I think we're already up to a terawatt or something by 2030. It's growing so fast. I can't keep up, but I don't see the nitty-gritty detail on the raw material, and I'm saying we prefer the route of what someone like Frey is doing, where you start to identify that early on and tackle that as an issue. I think is very important.
Okay, well, that's a fascinating way to sort of like analyze the companies through their suppliers. It's not a method that I've done in the past, so that's a really interesting angle that I think you bring in.
Well, I think, the problem is a lot of people like, and even to be granted, like Elon Musk said, lithium's not a problem and that's not a problem. And, theoretically on first principles, he might well be right. But practically speaking, mines take a long time to get up and running. I mean, you look at how many, mines in Europe and elsewhere are running into permitting issues. And even then, once you've permitted it, to construct and to build, and then to commission and ramp and then qualify into the supply chain is an arduous task. So you need to have a handle on it early on. And if you can have someone like Glencore that understands the OEM supply chain, and someone, like Tolga, who's targeting carbon neutral graphite, then, you pinpointing the things that I think are really important, because by the time it comes, it doesn't matter, it becomes like liar's poker. If you go from whatever terawatt hours to more terawatt hours, and you just keep putting higher and higher numbers, none of that is backed by the raw material requirements. There's no line of sight on it. So you need to deal with it sooner rather than later.
I was going to ask you for a prediction. By, say, 2025, do you think Tesla will they be producing enough 4680s to meet their own demand? Do you think they'll have a surplus, or do you think they'll still have a shortage?
So the one good thing about Tesla is that, their internal procurement, again, we've had this discussion, a lot of traditional OEMs decided that EVs were a sideshow and they just outsourced the battery cell supply, and Tesla in-house, it's all they do. So they've taken it seriously. And they work very closely with their suppliers and build up long-term relationships. So, it's a good question you ask. I'm saying they have the right approach to the raw materials. But even then, they've also, prices have finally reached, in CIF North Asia and in China spot, hydroxide is finally 15,000 and a bit above that. Now that, if you can get contract pricing at that price, that's incentive pricing. People will build. But the thing is, if you do a greenfield project, even if we were to start at the end of this year, it won't be ready by 2025. So you've got to literally be chasing brownfield and already in construction projects in order to get the materials. So I guess my answer is loaded. What I'm saying to you is, if Tesla is going to compound by 50% plus in its sales, I don't know how. It's going to be a real struggle just to even have enough raw materials for Tesla's 4680, excluding everyone else in the market.
Wow.
So if you're going to build a lot of semis and cybers and what have you, where you're talking anywhere between 65 to 110 kilowatt hours in the EV side of things, and then the semi being whatever 600 or whatever, then if you're averaging, let's say 100, they will be hard pressed, I think, to be selling 6 million cars by 2025.
So for everything that you were saying then, like in terms of the semi and how much battery raw materials it uses up, like when you then compare it to how many vehicles they could make, do you then see them having to raise the price of the semi to make it worth
No, I
utilizing?
mean, there's a lot of, if you remember Battery Day, there were a lot of advancements that they could do in the battery manufacturing that could lower the price, that had nothing to do with the raw materials. But eventually you bump up against the raw materials. There's nothing you can do. Now, again, we get back to the point, and I keep saying this, you need to control your raw material costs. Now, how do you do that? You've got one of a couple of ways. You could sign contracts, but to my mind, it's too late now. Prices are too high. You might get a slight discount, but you're not going to do it. You can produce internally, which is what they've done. They've signed an offtake agreement with Piedmont. They're going to build a chemical conversion plant, I think, in Austin, near where their cathode is. That can get your costs down to $8,000 or $9,000 a ton, and they can scale that. The other thing is this clay story, but I don't hold any hope before 2025 of any of that in size. But they could, Tesla and others, and VW has said they would like to get involved in upstream. So the question is, if they do a cell plant in the Czech Republic, would they look to make an equity investment into Sinovac? Is that what they're talking about? Because they understand as well, it's all fine and well to have security of supply. That is important, but at what price? So I think you're going to see there's no way around this now. You can't develop greenfield projects on time now to meet near-term demand. It's not possible. You can do it for longer term, but what you can do is invest and do M&A in the most advanced projects in order to get security and lock in a lower supply, because a lot of the developing companies now don't trade at prices that are discounted using $15,000 a ton, which is where spot's at. They trade at discounts to that. So if you can get a discount to that, it means you can lock in your lithium units at a cheaper price. So Tesla, I think, is looking for that. They've invested in a nickel project they've got involved in. They're doing the Piedmont spodumene. They're going to produce their own. And I think, again, they've got a head start. It's a bit like the technology. They've got a head start on the raw material side. So now the question is, it's not just Tesla you're competing against. I don't know if you've noticed, but Ganfeng's buying up everything that isn't tied down as well. They've done Bacanora. They're doing internal expansion. They're doing Mariana. They have expanded at Mount Marion on the raw material side. They've done Goulamina. So, it's getting competitive out there, but I think when the OEMs wake up or the downstream customers wake up, they're going to figure out they're going to need to do M&A.
All right, Rodney. Well, I think that's an excellent update in terms of, what's happening over the last 6 months. So yeah, I just want to say, thank you for coming on. I mean, I know a lot of the viewers are always thrilled when they see you come on because, yeah, no one really breaks down the fundamentals as well as you do. So I just wanted to say, thanks again for taking the time to be on the show, and we'll talk soon.